Okay, so let's get into some more company results today then. IAG, the insurer, posting a near 8% jump in full year profit to $898 million and lifted its full year dividend by 80% to 27 cents. Less volatile weather conditions and an 11% rise in insurance premiums thanks to higher price pressures helped boost its bottom line. Its insurance profit jumped 79% to $1.44 billion. It's paid out $10.7 billion in claims over those 12 months. Final dividend of 17 cents a share. Pallet maker Brambles expecting FY25 underlying profit to grow by between 8 and 11%. It's lifted its dividend by 30% for FY24. Sales revenue rising 7% in the year to $6.55 billion US dollars, driven by price realisation, while both underlying profit and earnings per share were up 17%. A full year dividend of 19 cents US a share has been paid, with the total dividend for the year at 34 cents. That's up 30% on the previous year. Oil and gas producer Santos posting a 9% drop in first half revenue to $2.7 billion US dollars, but it will pay a record half year dividend. Earnings falling 13% to $1.8 billion US dollars and underlying profit slipping 18% to $654 million. Santos saying it has a strong free cash flow from operations of $1.1 billion US dollars and is seeing strong delivery of projects, including Barossa, on track to be completed in the third quarter. Its guidance remains unchanged, and shareholders will receive an interim dividend of 13 US cents a share, unfranked. Shopping centre giant Scentre Group posting first half profit of $404 million, which includes an unrealised property valuation decrease of $120 million. Funds from operations in the 6 months to June rose 2% to just shy of 11 cents a security. Its occupancy is at 99.3%, up from 99% in June, in fact, last year, and average specialty rents increased by 5.5% in the period. It expects its payout there to be in the range between 21 and 22.25 cents for FY24, which represent 3% growth. It's tipping a 3.6% increase in distributions for the year. Scentre Group paying tribute also to the families and loved ones of the victims of the Bondi stabbing attack in April. Domino's Pizza posting a 2% drop in full year profit to $120 million. It's seeing a slower than expected start in same-store sales for the beginning of this financial year. Underlying earnings growth rose 3% to $207 million. Global sales rose more than 4% to $4.19 billion, while online sales were up 7.5% to $3.37 billion. Domino's Asian business was affected by external factors, it says, including geopolitical tensions in Malaysia. Shareholders will receive an unfranked interim dividend of 50.4 cents a share. Total dividend for the year, $1.05. Logistics software maker WiseTech Global reporting a 28% jump in full year profit to $1.04 billion, I should say. Net profit rising 24% to $263 million. Its flagship software product, CargoWise, grew revenue at 33%, and it's announced that it will launch 3 new products in the first half of this financial year. The company has declared a final dividend of 9.2 cents a share. That's up 10% on the previous year. It's also forecasting revenue to be between 1.3 and 1.35 billion, and EBITDA to grow between 33 and 41% for FY25. Corporate Travel has issued a profit warning. It said changes to the UK's refugee detention program will impact the first half of FY25 and has forecast lower earnings in the period until the end of December. For the financial year just gone, underlying profit came in at $201.7 million, which was up 21% on the prior year. It's declared an unfranked final dividend of 12 cents a share, taking the total shareholder payout to 29 cents a share, which is up 4% on the previous year. PEXA reporting a loss of $18 million for the financial year, $3.8 million improvement from the previous year, though. Revenue jumping 21% to $340 million. Chief Executive and Managing Director Glenn King noting the board of his intentions to retire by the end of FY25. The company has guided an adjusted earnings growth of more than 34% for next year. Plans to expand into Tasmania and integrate better with the property market in the Northern Territory for the next year. And in the UK, the company plans to expand its customer base and increase distribution in the conveyancing market. Building materials company Fletcher are swinging to a loss of $227 million for fiscal 24 from a profit of $235 a year ago due to lower gains in materials and distribution divisions. Group revenue from continuing operations flat for the year at $7.6 billion. The company says market volumes declined materially in FY24, with volumes in New Zealand down 25%, while in Australia they fell 15%. It's not issued a final dividend. Shares are down. Contractor Ventia Services posting $3.1 billion revenue in the first half. That's up more than 10% on the same period last year. Net profit up 12.5% to $106 million. An interim dividend of 9.35 cents declared, franked at 80%. And the company has also given an upgraded guidance for the full year profits to be between 10 and 12%. Chief Executive Dean Banks saying the upgrade comes on the back of a strong performance and outlook. That we're going to catch up with Dean Banks a little later today. Cedar Woods net profit after tax rising 28% to $40.5 million. The company pointing to housing demand, pushing its sales as a reason behind those results. It's declared a fully franked final dividend of 17 cents a share. The property development company now targeting a 10% growth in NPAT for FY25. Managing Director Nathan Blackburn saying Cedar Woods has started FY25 in an excellent position with $559 million in pre-sale contracts. Check of some of the other companies we're keeping an eye on. Brambles has reported adjusted earnings of $185.7 million. That's slightly above guidance, represents an 8% increase from last year. Revenue and gross profit also increasing, leaving the company to distribute fully franked dividend of 33 cents. Cleanaway Waste Management net profit after tax of $170.6 million. That's up almost 15%. With that, the company will distribute a fully franked dividend of 2.5 cents a share. Its guidance points to adjusted earnings of between $395 and $425 million. Data 3 adjusting earnings, they're up 5% to $53 million over FY24. The company says it's notably accelerated its cloud-based customer solutions. Dividend up more than 16% to 25.5 cents a share. And network service provider ServiceStream reporting a revenue of $2.3 billion in FY24. That's up 11%. Profit $50 million, up 36%. And the company will pay a dividend of 4.5 cents a share, which is an increase of 200% over the previous year.